Hello and welcome to the 11th lecture in our module entitled Fight Against Corruption, which I'm teaching at Baku State University in spring 2020. This is a course for the postgraduate students in law faculty, and the title of our today's lecture is Prevention of Money Laundering. This is quite a big topic, so as you can see, this is only part one of this of the topic. So the traditional address to all the students and listeners: please stay at home, be optimistic, and value your time. The content, speaking of money laundering, as you can see, the today's topic is about prevention of money laundering. The previous lecture was about criminalization of money laundering. So in a sense, this is a switch within the topic of money laundering, but it's a switch to another big area, which brings me to the first point of our today's content. I will set up a general context of this topic so that you see it in a perspective. We will go very shortly through the previous lectures, speak about some concepts, and then go into national law and experience. So, as I told you several times, Azerbaijan took on this United Nations Convention Against Corruption's model in the fight against corruption, and our today's topic is still within the domain of fight against corruption. We will not go into very big details, deal of details of money laundering. It's a very big topic. It merits a separate course, it merits a separate study, a separate degree perhaps. So we will speak about this issue only in the context of fight against corruption. And this topic, this area of fight against corruption, according to the UNCAP model, is composed of prevention of corruption, criminalization, legal cooperation, and asset recovery. So far, we spoke about criminalization. We covered different types of corruption offenses and also money laundering offense. Speaking of corruption offenses, we covered bribery in its active and passive form, embezzlement, fraud, obstruction of justice, offenses in the private sector, and other offenses. So now, in order to facilitate, as you can see, now we've spoke about money laundering under the heading of criminalization. So in order to make it smooth for you to pass to the topic of prevention of corruption, which is actually bigger than criminalization, much bigger. It's the biggest topic, biggest heading in the context of fight against corruption. So I chose deliberately to switch from the topic of criminalization to prevention of corruption within the framework of fighting money laundering, as this topic is already familiar to you, so you know the basic concepts, what kind of crimes could appear, you know the elements of the money laundering offense. So now we're switching to the prevention. And again, prevention of money laundering is much bigger area than criminalization. So you remember this. As you remember, the three elements of money laundering, as when we speak about it as an offense, it's placement, layering, and integration. In order to get to know more about these concepts, you need to go back to our previous lecture number 10. Um, when we speak about prevention, just to show you, to make it for you more easy to understand in a graphic way, if you remember our fancy animation, our fancy picture of dirty money entering legal economy into various outlets like banks or factories and shops. Well, prevention of money laundering, it comes before this stage. The purpose is to detect before the actual money enters the legal economy. It's layered and then integrated, after which it becomes already an offense and it requires drastic measures in the field of criminal law. So prevention actually is the stage which precedes these actions, or at least helps to detect them and avert them. And in this area, it's most important conditions for the success of the prevention of money laundering. Success depends on two crucial criteria of international cooperation, effective international cooperation, and the factor which ensues from and which is determining the international cooperation, which is compatibility of national measures. As we know, money laundering mostly is taking form of crossing borders nowadays. When we speak about big money laundering cases, they're moving money and assets, they're moving from one jurisdiction to another jurisdiction in order to lose the trail of illegal origin. So when we speak specifically about prevention of money laundering today, the subject matter of our today's conversation, it will be about such as an introduction. I can tell you that money laundering is about several crucial concepts such as actors, the persons and organizations which are operating in this financial field, in financial and economic field, and which are subject to measures which prevent the laundering of illegal proceeds of crime. And we will speak during this lecture and next lectures about such concepts as KYC, know your client. Briefly, I will mention to you it's about the identification and finding out about the identities and making these identities known to the partners in the economic transaction and economic deals. It's about record keeping. As we know, money laundering is about financial system. Therefore, any transaction, any operations, they have to be taken record of. They have to enter books, either physical books or electronic books, and these records, they have to reflect the nature, the identities of the participants, the size, the volume of the transactions, and other information, and certainly the certain criteria which are posed to this record keeping procedure. There are rules which determine the length of keeping these records, etc. Also, we'll speak about this fancy abbreviation, as you can see, STR, suspicious transaction reports. That's already when it's a kind of alert, it's a ringing bell when criminals are trying to introduce their money into legal economy. They're just making attempts. The system must be ready. There must be flags set everywhere throughout the system, from all borders, from all sides, so that this attempt is made. The system is ready, the actors are ready, they know exactly what to do, how to do it, how to inform it, how to raise this flag, and to whom pass on this information, and this Receiver of this information must be ready. The receiver must know who to get this information from and where to take on this action, course of action, what within which time frames to act, and what kind of measures shall be taken in response to the STR, which stands for Suspicious Transaction Report. And crucially, we will also speak about FIU, which is Financial Intelligence Unit. Financial Intelligence Unit. These are main institutions specialized in the field of preventing, detecting, sometimes investigating, often regulating these anti-money laundering measures, but they are mostly dealing with detecting and sometimes they're for performing administrative functions. It depends on the model which it has. Financial Intelligence Unit is a specialized agency with a national jurisdiction which is handling these issues, and it shall be composed of the specialists in this area, and it shall enjoy, as we spoke previously, in the case of specialized anti-corruption agencies, it shall enjoy certain type of autonomy, it shall be provided with necessary resources, and of this we will speak later during our lectures. So let me remind you this briefly about the international instruments which define the fight against laundering of illegal proceeds. These are Merida Convention, Palermo Convention, Vienna Convention, also Warsaw Convention and Strasbourg Convention. They are defining these various issues of criminalization as well as prevention of money laundering. Also, I forgot to mention the directive of the EU in this field. As you can see, in many cases this topic is handled along with adjacent topic, which is financing of terrorism. So it started as a money laundering, then financing of terrorism joined this as a twin topic, and then they became triple by the joining of the proliferation. So these issues are considered in a bundle, the three of them, and now the international framework defining fight against this phenomena is treating them at the same time at similar level. Also, in addition, I want to mention specifically for this topic the United Nations Convention for the Suppression of the Financing of Terrorism of 1999 and Security Council's resolutions, as you can see it on the screen, of 1999, of 2001, also several on 2001. You can see them identified by different numbers: 1267, 1373, 1377. These are resolutions which are dealing with specific issues, such as you see the date of this resolution, the year of this resolution, 2001. Obviously you will guess, and your guess is right, that it was after this September 11th tragedy and tragic events. So these resolutions were taken at the United Nations level in order to support global action against terrorism and other issues. So let us differentiate at the regulatory level. When we spoke about criminalization and when we are going to speak about prevention of money laundering, at the regulatory level, when anti-money laundering measures, they were more pertinent to criminal law, and they were actually targeting, they were destined for law enforcement, including the courts, of course, law enforcement agencies and courts. So in that sense, the criminalization of money laundering, it was about this criminal law and law enforcement type of activity, whereas in case of prevention, it's about civil law. And when I say civil law, it's in Azerbaijan, it's a big concept which covers many areas, in which are under this umbrella of civil law. So, including some administrative measures as well. And here, mostly these anti-money laundering measures under the heading of prevention, they are targeting financial infrastructure. So they are written, they are presented for the improvement of the financial infrastructure. So let us switch to the United Nations Convention Against Corruption. It's a big article 14 which reads, and I will just read it for you once very quickly. Institute a comprehensive domestic regulatory and supervisory regime for banks and non-bank financial institutions, including natural or legal persons, that provide formal or informal services for the transmission of money or value, and, where appropriate, other bodies particularly susceptible to money laundering, within its competence in order to deter and detect all forms of money laundering, which regime shall emphasize requirements for customers and, where appropriate, beneficial owner identification, record keeping, and the reporting of suspicious transactions. Don't worry about the length of this text. We are going to dissect and take the rationale and put it up front for you to understand it better. So, first of all, we are speaking about comprehensive domestic regime. When we say regime, we speak about the general framework, general arrangement, the whole space for the operation of the legal, economic, and financial actors and for this type of activities. And when we say so about this regime, we mean actually regulatory and supervisory fields. Regulatory, what's the difference between them is that regulatory is when the appropriate statutes and statutory instruments are produced and the situation is studied, and according to the studies, the competent authorities are introducing regulatory instruments. As I mentioned, they could be laws or instruments or regulations or rules and other types of documents. When it comes to the supervisory part, it's actually about watching over the implementation of these regulatory parts. So in a perfect arrangement, in a perfect structure, this regime has to have separate actors, one of them dealing with the regulatory activity, the other one shall deal with the supervisory activity, yet another one shall be handling this representation of the industry on the professional level and on the business community level. So if you are counting, which I expect you to do, you've already counted 4, right? Regulatory, supervisory, then representative at the business community level, i.e. the employers, or the professional level, the people who are working in that field, employees. That's already 4 for you. Then a separate institution which is dealing with the kind of detection of money laundering instances, And another actor, perhaps it could be the agency which will investigate this type of offenses. So overall, when we speak about this general framework, general operational system or regime of countering money laundering, we are speaking at least of six different actors. Whereas when we speak about specifically prevention, we are speaking about two of them, of regulatory and supervisory, but in view of the democratic nature of the process, we also have to secure the representation of the industry. Therefore, by saying the domestic regime for prevention, although I don't have it on my screen, I also mean this additional representation part as well. So far, I'm referring only to the United Nations Convention, which does impose it as specifically under this heading, but it passes throughout entire United Nations Convention provisions. So when we speak about this prevention domestic regime for the prevention of money laundering, we speak at least about two headings. It used to be that in Azerbaijan there were two separate agencies dealing with the regulatory and supervisory activities. Now there's a bit of mix up, while Central Bank of Azerbaijan is implementing the functions mostly supervisory, but they also implementing regulatory activity. Of course, not entirely they are in charge of supervision. There is an FIU who is discharging this function too, but certainly it has central bank has certain supervisory functions as well. But this process is still in the establishment of this regime is still subject to the changes. It's evolving process. It doesn't stop. It's constantly changing. They are introducing necessary barriers between these different functions in order to secure this institutional autonomies of various units in charge of these functions. The purpose of this activity is clearly set in Article 14.1.a. It's to prevent and detect all sort of occasions and manifestations of money laundering. So let me switch now to the actors. Actors is a term which I use for the purpose of this lecture. It means that all the persons and organizations which are operating within this comprehensive domestic regime for the prevention of money laundering, and which which have to carry out, due to the nature of their activity, they have to follow the necessary regulations which I mentioned to you in the previous slide. So, who are these actors? By logic, of course, at the top of the list we have the institution, which is handling the biggest proportion of financial resources, the biggest proportion of monetary resources of a country. These are banks. Naturally, banks are most prone to this, most susceptible to the money laundering activities, and banks are the first place which we imagine, which come to our mind when we speak about legal economy. But let us look at it from this perspective of organizational arrangements. Banks are usually formal institutions which are subject to a very big number of formalities, to a big volume of regulation, strict requirements and safeguards, all elaborated and installed in order to secure the money, the other objects of value which banks are in control, and this actually sets a very high threshold, the very high threshold for an institution to reach. Money shall have certain amount of capital, they shall have their assets up to a certain value. Otherwise, if they don't meet these requirements, they will not be considered banks. And banks usually enjoy this prerogative of engaging in a very big number of banking activities, such as collection of money from the natural and legal persons in order to accumulate and further invest this money. Banks are entitled to loan money to the private persons, to legal persons, to various actors, and earn interest out of this loaned money. So there's a very vast list of activities, banking activities, which formal banks can be engaged in. But if there are other institutions which they don't actually want to be engaged in this wide spectrum of the banking activities, perhaps they want to engage in a shorter list of activities, specific type of activities. For this type of institutions, they don't need to go all the way to meet all these formal requirements. They can meet their own requirements but still be engaged in certain type of activities which are reminiscent to banking activities. For example, they can invest money into various sources, they can be engaged in microcrediting activities. So there are this type of financial institutions which are not meeting the standards of statutory standards for the banking institution, but they're still considered financial institutions. There are also other actors which are engaged in different types of activities, in different type of dealings, and these institutions can be collectively joined, listed under the umbrella of this term of non-banking financial institutions. Also, they are subject to this regime of domestic regulation for the prevention of money laundering for natural and legal persons. Of course, not every natural and legal person, but people who are engaged in type of activities or transactions or dealings which are susceptible to money laundering, which are in essence they are of economic or financial nature. And as you see here, the United Nations Convention also introduced this specific term of other bodies particularly susceptible to money laundering. This comes in line with the general approach of the United Nations Convention Against Corruption, that concepts and definitions in this instrument and the national legislations which are following its patterns, the patterns of this convention, they shall not be limited. They shall be using the concepts and terms which are involving, which are not exhausting, which will not allow, if we cut it short, which will not allow for criminals, for the people breaking laws to get away with illegal activities just because the specific type of the activity which they were engaged in doesn't fully match the definition mentioned in law. So under this heading, the legislator, the United Nations Convention, it urges the country to take their own approach, their own methods in defining which are the bodies, which are the persons or legal persons, institutions, corporations can be susceptible to money laundering. It could be that in one country there are one areas which are more prone to money laundering, whereas in other areas the same area is not so prone to money laundering due to the different level of regulation, different standards of security and safety in that type of institutions. Also, some countries may be engaged in certain type of activities because they have resources for that, and the other countries may not have exactly the same type of resources, and therefore they may not have exactly the same type of industries and sectors of economy. So this heading is more prone to the countries to define themselves. Type of services, which is very important to mention in this context, when we speak about financial and economic activities, and we also mentioned this financial infrastructure, it is important not to limit this regime, the boundaries of regime of domestic prevention of money laundering to formal channels, to formal institutions, because economy is not composed only of formal institutions and channels and branches and industries. Sometimes, and not even sometimes, but quite often in many jurisdictions, informal services may actually surpass the volume of the formal services. So this regime must also take into account the specificity of that country, the type of dealings, the type of economy. We all know that in addition to main economy, there is also a shadow economy, and the money laundering regime shall encompass and cover this area too. This doesn't come to the meaning that it is supposed to bring some sort of legitimacy to these informal services. By no means it doesn't mean that. It's just that the system shall be ready to detect and resist and avert this type of activity when it's actually crossing the border of legal activity, and when it's actually turning into the area of criminal money laundering, when there's already offense of money laundering happening. So it shall also take into account these informal services. And the form of services, when we mentioned in the previous slide, if you remember, the physical and legal persons, I told you that not every physical or legal person is subject to this regime. It's only about the types of legal or natural persons who are engaged in some form of movement and transmission of this money or value. The measures mentioned by this specific provision of United Nations Convention Against Corruption, Article 14.1.a, it lists these measures of customer identification, as you can see, beneficial owner identification, accurate record keeping, and suspicious transactions. To this we will come back later. So when we mentioned these other types of actors falling under the effect of this anti-money laundering prevention regime, we spoke about other non-financial institutions, non-banking financial institutions. This could be the ones mentioned by the international community developed legislative guide to the implementation of the UNCAC. This could be stock brokering firms, security dealers. This could be currency exchange bureaus or currency brokers. And as I told you, now I give you an example of these informal remitters. These are well-renowned, notorious systems of Hawala and Hundi. I'm not going to go into detail on explain you what the meaning of these terms are. You can look up in the internet, but briefly I will tell you that Hawala is a system of informal transmission of money across the borders when the people transferring this money and currencies or objects of value, they're not using the formal structures, the formal financial arrangements such as banks or other currency exchange bureaus. These are informal arrangements when people are in exchange for favors or in exchange for business, they are remitting money from one country to another country, and usually this goes along these ethnic and national lines when the business people from the specific ethnicity or racial group, they arrange financial resources in one country and then secure its transmission to another country, usually the country of origin. And this system is informal, it's illegal, it's designed in order to avoid paying of the fees and taxes, and it really poses a very big danger in terms of laundering of proceeds of crime and also in the field of terrorism financing. So this system of regime of prevention of money laundering is supposed to be capable of detecting and averting this type of illegal mechanisms as well. The United Nations Convention not only refers to these actors by listing these previous criteria, it also refers to a type of businesses which need to be encompassed by this regime. And here on your screen you can see a real estate, trade of commodities, precious metals, dealing with precious metals and dealings with precious stones. And as an example I gave you this gold and diamonds. Also in tobacco, in the context of financing of terrorism and also money laundering, we can continue to add to this list also, for example, firearms. We know that all these industries, they have one thing in common, and I think you guessed it right. If you guessed it, and I urge you to guess what's the common between them. Of course, it's they are lucrative. They are generating income in vast quantities. So wherever the income is generated, there's often a risk of abuse of that system, abuse for illegal activities, for gaining illegal means, and also money laundering. Also, in interpreting the UNCAC provisions, we can mention these specific professions which are also dealing with important and valuable property as well as with monetary resources, and these are specific type of professions. They are lawyers, notaries, it could be independent legal professionals dealing, for example, with bonds, or conveyances who are dealing with real estates. Naturally, it could be accounts which are also dealing with this type of assets. It could be trust and company service providers. Of course, in Azerbaijan, we don't have trusts because this institution is not regulated or foreseen in our legal system, but increasingly we have a great number of company service providers. So these are also important, the companies which are providing different sorts of services, like, for example, accounting or setting up business or consulting them. And these are professions which are prone, again, they're prone to the risk of money laundering because they're dealing with the valuable assets, and they need to be subject to regulation in order to detect and set these flags of risks of money laundering. In Azerbaijan, okay, so far we spoke about the requirements of international instruments, and we specifically mentioned the United Nations Convention Against Corruption, but let me tell you that it's a kind of a snapshot of requirements of other international instruments which I mentioned to you in the field of countering money laundering and terrorism financing. So UNCAC, in a sense, it's a kind of a short version of these requirements of these many national international instruments. So far, we spoke about United Nations Convention Against Corruption. Now we will speak about mirroring provisions of Azerbaijani legislation. We'll start to speak about it today, and we will continue to speak about this in our subsequent lectures. Main piece of legislation in Azerbaijan, and here you have it, the very precise word-by-word translation into Azerbaijani from Azerbaijani language into English. It's fight against legalization of money and other property proceeding from crime and financing of terrorism. The act was passed in 2009, and since then it was changed numerous times in line with the requirements of international instruments in these fields, as well as mainly according to the recommendations of international expert organizations. And I'm glad that Azerbaijan is successfully passing these evaluations in this field and introducing all necessary norms. This is one of the main pieces of legislation. Don't forget there are many other provisions as well. In Azerbaijan, this issue of regime is kind of transposed through the concept of monitoring, which is defined in this subsection of 1.0.6, and here you have the definition of the concept of monitoring. It's about measures of control carried out by the financial monitoring organ, and I will speak later about this financial monitoring organ. So it's a measures based on the information on transactions with the funds or other property. As you can see, the range of the subject matter is quite wide. It covers not only money but everything which is of value, and these are supposed to come received from the monitoring entities, other persons involved in monitoring, the supervision authorities, or other known sources. Let me tell you one thing. When I was composing this presentation and preparing for legislation, I used the official translated text. Well, official as much as it could be official. I took it from the site of the specialized national agency in the field of prevention of money laundering, FIU. In Azerbaijan, it's called Financial Monitoring Service. I took this English text of national legislation of this law from their site. I find personally myself this term monitoring entities a bit confusing, because it doesn't refer to entities which are actually monitoring, but they are subject to monitoring. Okay, so please note this, that we are speaking about entities which are subject to monitoring, and also here the persons who are also, they are within this regime of monitoring, so they have to comply with the rules rather than to watch over compliance by these rules of other institutions. Monitoring entities, which were the first in the list, which I referred to a bit earlier, they are defined as those who are obligated to implement the measures stipulated under this law on the prevention, on fight against money laundering, for the purpose of preventing the legalization of criminally obtained funds or other property and financing of terrorism. So what does it mean? The law provides the specific list, and if you remember, in the United Nations Convention we had this very multifaceted approach to defining who exactly are these entities, persons, legal persons falling under this regime of prevention of money laundering. Here we have also a very wide approach, wide and inclusive approach, which includes credit institutions, which includes insurers, reinsurers, insurance intermediaries. As you can see, Azerbaijani legislation is using this technique in order to define different types of insuring activity. Also, it refers to the investment companies, which can take any form of organizational building. It also refers to legal persons providing leasing services, institutions and other organizations providing post services that are engaged in transfer of the funds. So not all post activities like sending envelopes or letters, but specifically engaged in the transfer of funds. And in Azerbaijan, post is playing a greater role starts to play a greater role in transferring these funds. It refers also to pawn shops, investment funds and their managers, and NGOs. As you can see, the list by the criteria of institutional arrangements is rather vast. Also, we have here referral to the NGOs, non-governmental organizations. Of course, we're not speaking about all of them. We are speaking about specifically branch or representative Office of Foreign Non-Governmental Organizations in Azerbaijan, as well as religious organizations, parts of activity of which consists of receiving, collecting, delivering or transferring funds. So as you see, the primary concern and the primary interest of this legislation, and hence the authorities dealing with the fight against money laundering, is about the cases, the institutions, the persons who are handling this movement of the funds, of valuable assets, okay, of everything that is value. And here you have this list which explains this movement: receiving, collecting, delivering, and transferring. Also, as you remember, the second in that list, apart from the entities subject to monitoring, there were also other persons, as you can see here, other persons involved in monitoring. And this include natural and legal persons involved in, as you can see highlighted in red color, they're involved in purchase and sale of. So that means in any kind of transactions and dealing with precious stones, precious metals, jewelry, or other goods made of precious stones and precious metals. So essentially we have here everyone who is engaged in formal, legally structured activity of this sort, or informal type of, who are not establishing this legal structure for this type of activity. And here you can see also the main purpose, that these are the persons who are that implement the measures provided by this law for the purpose of preventing the legalization of criminally obtained funds and other property and financing of terrorism. Well, in simple language, in this, not this vernacular, it means that any people whose activity actually is meeting the criteria of the activity that shall be regulated, that is prone to risk, that shall be subject to monitoring. So we're going to continue this list. Also, it refers to natural and legal persons that provide intermediary service on purchase and sale of real estate and lottery as you can see, in addition to precious metals and precious stones, we have the two other areas, lucrative areas again, of real estate and lottery. And finally, the legislation refers to these specific professions, which are sport, betting games organizers, lawyers, notaries, and persons providing legal, accountancy, tax consultancy, or audit services. Again, as you can see, this universal formula applies here as well. So, the Azerbaijani legislation also uses different criteria in order to encompass these multifaceted types of businesses and professions and engagements in order to make its regime for the prevention of money laundering as comprehensive as possible. So here you see the entire list. That brings me to the end of our lecture because we have covered sufficiently big information. I'm going to continue from this point during our next lecture, 12th lecture. But so far I finish my lecture with this message. Please stay at home. We know that we have only short time left in order that this is going to finish soon. Be optimistic and value your time. Engage in useful activities.